Good evening, good evening, good evening, everyone. This is Sharon, your retirement coach diva, and again, another exciting night here with us on Facebook Live and streaming. And I have with me Miss Lovely Hope Brown, who is the CEO and founder of the Tax Minded Bookkeeper. And we're here today to talk about closing out 2023 and starting 2024 on the right path as we are looking at our taxes and just getting some tips on how we should do it as individuals and as business owners. So thank you so much, Hope, for being a part of our event this evening. I'm so glad that you were available to talk to us and talk about this great and important topic.
Yes, absolutely. Thank you for having me. I'm so delighted to be here. This
Thank
is my favorite time of year, like the tax time.
you.
So
Yeah.
I
Well,
love
you know what? You are probably one of very few people who
I
like
know I
that.
got issues. I know I got issues. But
Those
no.
people are like, oh, taxes. I do not like to deal with that. And those are probably people who have or just have a lot going on and not organized. But we're going to that's for another day. So
Yeah,
we're going to talk
yeah.
about we're going to talk about giving some tips on how people can
Mhm.
really prepare and just move forward and start 2024 on the right path so they won't have any issues when they get to file their taxes for 2023 or 2024. So first, before we get started, I would like for you to tell us a little bit about yourself and how you got started in tax preparation and bookkeeping.
Sure, sure. So, everybody, my name is Hope Brown. I am the founder of the Tax Minded Bookkeeper. So, we are a specialized boutique accounting firm. We basically help individuals, like small business owners, stay on top of their bookkeeping, understanding their numbers. But we're also here for individual tax, clients to just help them strategize and really maximize their tax savings. How did I get started? I grew up in a family of entrepreneurs. All right. And just watching my parents kind of conduct that financial process, like taking care of the finances in the business, it was always a weak area for them. Like my dad he could sell anything to anybody. Okay. Made a lot of money. But when it came to the financial management part and definitely the tax part, he had challenges with that. So you know how people take this childhood trauma, with them into adult. So for
Yeah.
me, that meant I had to get 3 degrees in financial management. I was like, it's not going to be me. That was my trauma. So, but no, I've been preparing taxes for 12 years now. And what was happening with the bookkeeping part, a lot of the business clients were coming to me and they were like, listen, you know this bookkeeping stuff better than us. Can you just help us with that stuff too? So the practice kind of grew to that and to include that as well too.
Oh,
But we're definitely super big on just helping people understand like the financial literacy piece. So,
mhm.
they can be in control themselves. That's important.
Yes, yes, that is important. And it really starts at any age as soon as you can grab onto it. We want to start young with our children, but whenever we can start to grab onto it, we definitely want to do that. So thanks for stepping out there and providing this great service to companies, to businesses, as well as individuals. And you're located in the DC area, but you service clients all over the country, right?
Yes, thankful, we are a virtual firm, but definitely I'm serving clients from the West Coast to the East Coast, so it's all about the services you need. We're very flexible. We definitely are, able to service clients virtually pretty much anywhere. So yeah.
Great, great. All right, so we just want to make sure that our listeners know that they can type into the chat any questions that they might have for Hope on taxes or bookkeeping, whether you're an individual or an entrepreneur, whether you have a small business, you could be doing some type of network marketing business, or you have like they used to say brick and mortar business, but now, but now it could just be a larger business. We want to make sure that we get your questions answered. And I just put into the chat Hope's website. So make sure you go to her website and review her information and contact her if you have any other additional questions that we're not able to answer this evening.
Mhm.
So, Hope, now today is December the 13th, almost the end of the calendar year, which for some of us are about the end of the tax year. What is some of the things that we need to do to close out 2023?
Yeah, so I would definitely say, so I'm gonna start talking first to my business owners. So these would be my partnership owners, sole proprietors, single member LLCs. The first thing you need to be doing, and like one of the number one tax tips I can give you is if you want to save on taxes, you got to have up-to-date accounting, up-to-date bookkeeping. And by that I mean you should be making sure that like all of your business bank accounts, your credit cards, you have some kind of organized way to be capturing all the financial information flowing through that. You've categorized it, you've reconciled it if it's in a tool like QuickBooks, but you've really had a chance to organize that information because face it, like we're in December, we got like 2.5 more weeks. If you have a bookkeeping subscription with like QuickBooks or Wave or FreshBooks, and you're looking in there now and it hasn't been done like since June or July, like we might we got it. Don't play with that. You got 2 weeks to get it right. We were joking earlier about, yeah, I get excited about numbers and taxes and stuff, but definitely like tax season is stressful enough. Like, don't put yourself in that position where it's February, March, and you're trying to organize and finish your accounting for 2023. Like, by that point, we're starting 2024. Get it off your plate, just have it up to date, and let's move forward with 2024. And I would definitely say if you are doing your own bookkeeping, you want to kind of reach out to someone who's a professional, whether that's your tax professional, your bookkeeper, or whatever, a bookkeeper, and have them just review it for sanity. Because again, just remember this information eventually is going to be going and used to prepare your tax return. So we definitely want to make sure that it's accurate, I would definitely say.
Okay, great, great. So, something came to mind. I know a lot of people who either have, they're doing cooking things in their homes, they're bakers, but they're doing things from home, network marketers. How would they make sure that they are completing their taxes properly? Because sometimes they may not feel, oh, I'm not making any money, and or I've just made a few $100s or whatever. How is it that they can make sure that they are completing, their business taxes
Mhm.
along, and keeping it separate from their, individual income tax?
Yeah, so I think what you're asking is how can they keep it from getting messy? What should they be doing?
Right, basically, yes,
Yeah.
yes.
So I think so first and foremost, so if you're making that side hustle money, I will say, a lot of times we are making money under the table or whatever. Well, not me, but certain people, we won't say any names or anything.
Right.
But technically, you're supposed to be reporting that as income. All right. So that's first and foremost. I know a lot of people don't want to hear that, but the good news is that you're actually able to write off what's considered ordinary and necessary expenses. So let's just say Hope the baker, I'm making cakes or whatever in my home, I'm selling them, and maybe I made, $1,000 or something last year. Technically, I mean, I had to buy ingredients, I had to buy supplies, I had to do a lot of different things in order to make those cupcakes or make those bakery goods. So really the expenses can kind of offset that if you're tracking them. So that's what I would say. Even if you don't have a more formal bookkeeping system or traditional bookkeeping system set up, like do yourself a favor and just use a spreadsheet to track the income and expenses so you can make sure that you have that information and you can properly report it or provide it to your tax professional to be able to report it for you. You just don't want no problems.
Yeah. So would you recommend that they would have some type of automated system to keep track of that? And if so, which one is like the easiest for someone who is brand new,
Okay.
who wants to just, get
Yeah.
something, have something that they can just put everything in?
Yeah, I mean, I'm a QuickBooks Pro advisor. So that means I've gone through different things with QuickBooks online. And so that is kind of like my accounting system of choice. Now, is that the only accounting system? No, we have FreshBooks, we have Zero, we have Wave Accounting, which is a free software that people love, So I would just say try them out until you feel comfortable with whatever the one is that you know that you're going to be using, because that's essential. But regardless of which one you use, the great thing about having a cloud accounting system such as QuickBooks or Wave or FreshBooks is you can hook your bank account, your credit cards. So it's pulling in all that information for you automatically. That in the olden days, we had to remember to jot this down and record this and that, but it's all automated. It can come into the accounting system, you can categorize it, and at the end of the year, you have a pretty little profit and loss statement that shows your income, your expenses, and how much money you made during the year. you know i
Great.
I think it's worth it, because I'm telling you, a lot of clients that I work with are new clients. Maybe they never had any kind of bookkeeping or tracking set up before, and they're really surprised, when they can. Sometimes you don't notice that you're making money, or you're spending this much money to make money, but when you're counting it like that, you're accounting for it. Like, you would be surprised what those numbers can tell you. Numbers tell a story.
All right. All right. That sounds great. And so again, trying to stick with what I know about small business owners. And some of people do multiple things, like you mentioned, you might have, doing baking in your home, but you also might be selling Amway, or you might be doing Mary Kay and have, some other business. How do you make sure that each one is separate?
So tracking for each one, that's what I would say,
Mhm.
because I'm gonna be honest with you. So you want correct hope answer, or
we
you want
we
tax
want our we want
professional?
our viewers we want our viewers to do everything legally, ethically, and
I mean,
morally.
so I would say, I was just talking to a client about this earlier. So we were in the example I gave her is that, okay, I provide bookkeeping and tax services. Okay. But maybe also I have a business where I'm making jewelry, custom jewelry for people out of stones or whatever. Now, could I put all of that into one basket, the income coming in, the expenses? Yes, I could. All right. But I would say you don't want to do that, only because when you're reporting that income, normally at a sole proprietor level, you're reporting that income on something called a Schedule C. Okay. A Schedule C, one of the pieces of information it's going to ask for is a business code. And those business codes normally correspond with the type of industry that business is for. So one with jewelry making, or jewelry producing, that type of thing, would have a totally different business code for tax preparation or accounting services. But the IRS is looking at that business code sometimes. So if they see expenses, okay, in my tax business, if I'm claiming like gemstones, or wire that I'm using to string the beads together, whatever, that doesn't make sense with the tax industry, it could get flagged, like from an audit perspective.
Mhm.
So I would say the correct way to do it is, if you have two different unrelated businesses, you want to be tracking them in separate, ways, separate, buckets or whatever, and then just basically report income and expenses for them separate on your return. And basically, that's reporting that information on a Schedule C for one business and a Schedule C for the second business, and including both of those with your normal tax return. That's the right way to do it.
Okay, that sounds good. We want to make sure that we're doing it the right way, because we
You
don't want anybody come back and
want
say,
any problems?
you're
Yeah,
right, that the
yeah,
IRS
yeah.
is sending them those letters
Yeah,
about
it's gotta
being funded.
because the term is ordinary and necessary for the business. So, the good news is that we can write off expenses, but it's got to be ordinary and necessary for that business. So again, it has to make sense, is what I'm saying.
Great, great. So again, we want to make sure that our attendees, our listeners, are getting the best information. So please make sure that as you're listening, if you have questions about business or personal taxes, drop them in the chat so we can ask Hope to provide you the answers on that. So Hope, I just wanted to know, were there any other tax tips that you wanted to give for entrepreneurs for 2023 before we flip to our individual tax preparers?
Yeah, I will say definitely this is a great time once you have your financial information together. So we talked about organizing, really looking at the financial information and getting it together, finish the accounting. This is really a great time from a business perspective. I pretty much got a full year's worth of data. Now is like the best time to look at that and really see like, okay, what have I done this year? Look at the high months, look at the low months. Are all the expenses here? Was I out and I charged something maybe on a personal credit card that I forgot to add in? We have time now, before the end of the year to get all that stuff in there, and it's non-stressful. So I definitely would say take the time to look at your financials and just make sure that everything that's in there that you see makes sense to be in there, if that makes any sense. So yeah,
Okay.
take
All
time
right.
to review it.
Okay, so we do have a question.
Mhm.
Del Rio asks, what if you started an LLC but haven't made income? Do you still have to file?
Yeah, so that's kind of like you're allowed to file. Let me start off by saying that. So the IRS for a brand new business, they will allow you in that first year to write up to $5,000 in organizational cost, and other expenses. So, but just keep in mind the clock starts, like the clock starts on that business from when you're filing it and reporting it from a tax perspective. And I caveat it with that because you have a certain amount of time that, okay, of course, it's a new business. You can show a loss. Okay, no problem. Okay. But after a certain point, you want to, at least going into, I say the third year, you want to be looking at some type of profit coming in that business. But the short answer is yes, you can file a return. It's your first year. You're probably showing zero for the income. You're writing off those expenses in the business. But then again, like I said, know that you're starting that clock on that. They want to see at least like, out of the last 5 years, you want to be able to have some type of profit coming in that business.
Okay,
So it's
all right.
not considered like a hobby or whatever from the IRS perspective. There are rules.
Okay, great, great. So now, for those who are going to file their individual income tax return for 2023, what should they be doing now before the end of the tax year?
Yeah, sure. So definitely from a W-2 perspective, just I would say you want to reach out to your employer, whatever your HR system is, look in there and just make sure everything is set up the way you think it is. It should be set up. For example, you think you have a certain number of exemptions set up. You just want to check and make sure that that's really in place like you think it's in place.
Mm-hmm.
You think that you've added a certain amount to your pre-tax retirement savings, you got until December 31st to make sure. Maybe you got one more pay period coming, but make sure that you've, put into your retirement vehicle whatever you want to put into that. Make
Mm-hmm.
sure they have the correct contact information. They have the correct email. If they're mailing out your W-2, you just want to make sure that all of that is current. Um, how many stories can I tell you about, it's the tax season and somebody's trying to track down a W-2 because they
Mm-hmm.
left a job, for example, and they didn't have their forwarding address and things like that. That kind of housekeeping you could be doing now.
Okay.
I would also say develop now some kind of filing system. So just think about it, in less than 30 days, we're going to be starting to get all of these tax forms either probably electronically delivered to us or by US mail.
Mm-hmm.
Me personally, for the stuff coming through the US mail, I have a box right by the door. If it's any of the tax forms, I throw it in that box,
Mm-hmm.
and then also I have an electronic folder where I store my electronic forms. And then once a week, the paper ones, I scan them and I add them to that electronic file. But basically what I'm saying is that I see a lot of people at the tax desk, they've gotten the forms, but to be honest with you, they've misplaced the forms.
Mm.
So I just say, just get that filing system set, aside to so that you can, you have it handy. You're not losing those tax forms as they come through. And then I would also say, for your preparer, if you've had any kind of significant changes in the last, since they last saw you, maybe you sold a house, you bought a house, you divorced, you got married, had kids, any kind of thing that could be impactful. You bought a rental property, you sold a rental property, anything that could be impactful to your tax information, you may want to reach out to your tax person now and say, hey, by the way, I did this thing. And
Mm.
maybe if there are things that need to be done to compensate for that, you have between now and December 31st to get ready. I hope,
Okay.
just some of the things I would think
Mm.
about.
Okay, yeah, great. Because one thing that I noticed maybe about a year or so ago is that my church stopped mailing the hard copy notices
Yeah.
on, by my offerings and tithes and things and started emailing them to me. And I was like, where is it? And so then I went into my email and found it. But I always pay online. So
Mhm.
when I get my receipt showing that I paid, I did just what you, I set up an electronic folder with
Mhm.
everything that I pay online. When they send me the little receipt that I know that I put it right there. So I have everything there for that year. So that's a great
That's good.
idea. I'm gonna have to start doing the one for the little basket when things come in the mail, because I that's not something that I thought about either. And another thing, my employer is asking now if people want to receive paperless W-2s.
Yeah.
So if that's convenient for you, you might want to sign up for that, but you got to make sure you're watching your email because if you don't, it could go to your junk or spam, and
Mhm.
then you say, "Oh, I didn't get it," but it's there, so you got to watch out for that. So we
Yeah.
do have another question in the chat. It
Okay.
says, if you have a college age child who gets to claim the tuition costs paid and expenses? So I'm wondering, do they
Yeah.
mean that the child claim it or does the parent claim it?
So in most cases, if the child is your dependent, okay, if you're still claiming that child as your dependent, you can claim that credit. So that's another thing too that a lot of people don't know. Like say for example, if you have a college age, they're in school basically. Make sure because a lot of kids don't pay attention to this, but the school issues what's known as a 1098 tuition statement at the end of the year. Well, sometimes they issue it, sometimes they just say it's there, but the kid is not looking for it. And
Mm.
if you, as a parent, don't ask for it, you could totally miss out. But that entitles you, depending on if tuition amounts were paid versus grants and things like that. That could be a really nice education credit that either you or your dependent could take advantage of. But I definitely, as a parent, if you're supporting that child, and this is where it really helps to work with your tax professional with your unique situation. If they're a dependent, I definitely would have them do an analysis with adding that to trying to see what eligible education credits as a parent, doing head of household or married filing jointly is eligible for because that can be a nice little chunk of change there. So, yep.
Okay, yeah. I'm glad you brought that up because I do have a college age child and I need to make sure that they are doing that information.
Mhm.
So, I have another question from Daphne. She says,
Okay.
can you explain to me how to claim the interest on my house?
Yes. So this is kind of weird, right? Because normally we buy a house, okay? One of the things we have to do, especially when you're new in the loan, you make your payments every month, but you know that a certain amount of it goes towards interest, a certain amount of that payment goes towards principal, okay? The interest portion can potentially be written off on your tax return when you itemize. So that means you're filing a Schedule A, things like that charitable deduction you were talking about, Sharon, all of that goes on a Schedule A. But
Mhm.
the really interesting thing that happened back in 2018, the Tax Jobs Act, it raised the amount of the standard deduction.
Mhm.
Okay. So what we're finding nowadays, I mean, I'm finding it at the tax, a lot of people, instead of taking an itemized deduction, which would include that mortgage interest, the standard deduction is higher than all of everything that's calculated on that Schedule A, including that mortgage interest. It's just it's not higher than the standard deduction that the person's eligible for. So in that case, even though you have we're not going to itemize if you're only getting, let's say 15,000 when you can get, a higher amount, based on your filing status, if that makes any sense. But that
Right.
is where it would go normally if the number makes sense for you to itemize. Another way that interest can be used also is if you have a business and you also want to use the home office deduction, a certain percentage based on what percentage you're using of the house for business purposes as your home office can be also written off with that interest amount. So sometimes we do that. So sometimes our client, it doesn't make sense for them to itemize, but we're still able to use some of that mortgage interest because we're doing the home office deduction for them. Hope that
Okay.
makes sense.
All right, great. And I hope that makes sense for Daphne. So Daphne, if you need some more clarification, let us know so we can ask Hope to clarify it a little bit more. I do want to go back to the W-2 employee. So, we complete those W-4s, but about 3 years ago, they changed the W-4. So now you don't just put down, you can't put down, I want
And
to do
exemptions.
exemptions. Like it is I have not changed my
Right.
taxes because it's too intimidating.
Yeah.
So how would a person really make sure that they have the correct number or
Mhm.
the correct amount of money being deducted from, trying to complete that W-4 form? I mean, the
It's
W-4 form.
tricky. Yeah. I mean, well, okay. So the standard answer to that is the IRS has instructions on their website and basically a worksheet that you can use to fill that out. Okay. So, sometimes it can be spot on, sometimes it isn't spot on if people aren't providing the correct information. I mean, we work with our clients to help them kind of walk through that when there are significant changes happening. But it can get complicated super fast because say if you have the W-2 position, but you also have a side hustle or a second job, it gets crazy really quick.
Right.
So you'll know when your taxes are done if you're, and I always tell people this, there's always a reason why you owe when you owe. Okay. So if you're going to a preparer and you owe, and they're not helping, if they're not explaining to you why you owe and offering you assistance to do whatever necessary adjustments to withhold more tax so you don't owe, like that's a problem. That's a problem. So I would just say, you can go to the IRS.gov. They have directions on how to fill that form out. If that's intimidating for you, you definitely want to be working with your tax professional based on your situation and what money's coming in, what money's going out to fill that form out correctly. Because nobody wants those kind of surprises.
No.
Nobody wants those.
I've
And
been
it's tricky
there,
sometimes
done.
because you have to look at the federal level, but then depending on what state you're on, if you're in an income tax state, you got to look at it from the state level too. So you definitely want to work with someone if those have been off in the past for you, I would say.
Yes, and so we have Del Rio asks, can you separate your business from your W-2 income by filing separately?
So it depends on the entity type that you're with. And I started to kind of talk about that earlier. I didn't want to dive too deep, but so if you're a sole proprietor, meaning, you haven't gone to the state commission to do a formal, LLC registration or whatever, or if you're a single member LLC, basically you're going to be filing what's known as a Schedule C, which is an additional form that you file to report your income and your expenses for the business. And it gets included with your normal 1040 that you file for your income tax. Okay. Now, if you are a partnership, a multi-member partnership, or an S corp, for example, or even a C corp, those have separate income tax forms that are filed. You normally get like a K1 which reports the income or losses for the business. And then you can use that to report on your personal return. So again, it all comes down to the entity type. I'm going to assume that he's probably the person is talking about a sole proprietor or single member LLC. And again, that's just an additional form that gets added to your normal 1040 that you file that collects business information. It's not like a separate tax return for the business that gets filed in that case.
Okay, great. And I believe you did answer Del Rio's question because
Okay.
she responded back saying thanks.
Okay.
For the answer, and Daphne said thanks um about the interest as well. So now let's move into 2024. Like I said, we only have 2 weeks before we'll be celebrating going into the new year, and we
Yeah.
want to make sure we're starting off right. So let's go back, and we started with the business owners, so let's go back to the business owners. What do
Yeah.
they need to do? What tips can you give them to make sure that they're starting off 2024 on the right foot?
Now, are you asking? I missed it. You're asking for the business owners, or you're
Yeah,
asking? Ooh,
business owners.
okay. Where do I start? So okay, so in my mind, I just saw like this new business owner. You trying to get it right. I want you to win too out there. If you can hear my voice, okay. The number one thing that you can do, I still go back to the accounting part, like the bookkeeping part,
Mhm.
coming up with some formal way to track the income and expenses going out of your business. Like that's just going to be life changing for you. And then also having a separate bank account just for your business transactions is also going to be like life changing. Like you probably are going to cry next year this time from happiness because your life is going to be a lot less uncomplicated. So setting up the separate business bank account just for the business transactions going back and forth, and then also figuring out some type of bookkeeping to be able to organize that information. So you have, having accounting or having bookkeeping allows you to have financial reports. You can look at that and see, like, wow, I'm doing really good in July. How much money am I spending to make those sales? What's working so I can do more of that, or maybe it's not going so good and you can see that in the financial data and say, you know what, I'm really sucking in like July. I ain't going to do that no more. And you
Mhm.
still have time to switch it up. But that's the power of good bookkeeping, and also just being you know just being right with not doing commingling. That's what we call it, being disciplined and not doing that. But if you, those are the top two things I would definitely say, if you're starting a new business owner, a new business in 2024. And then also get yourself a good like a team, so maybe you're not at a point of where you need a full-time bookkeeper or you need a tax person you're talking to every month, but at least have them in your Rolodex
Mm,
and call them and let them know, like, hey, I'm doing this. Like, can I get a consult and let's talk about this because I want to get this right during the year,
mhm,
so we
mhm.
don't have any surprises next year this time.
Yeah, sounds good. I have a question about business ownership and the tax year. Now, how does a business determine their tax year?
So it depends on, I mean, like most, so I serve service-based business owners. The
Mhm,
majority of them are tax year starts January 1st and ends December 31st.
mhm,
But there could be some different requirements based on industry that you're in, where
mhm,
it makes better sense for you to have an adjusted fiscal, where maybe you're starting at a different point than January 1st or ending. But a lot of that's going to be industry based. I see a lot of nonprofits, for example, excuse me, they might have a different starting date than January 1st.
mhm,
So I think it just all depends on just your industry, the business. Maybe it's some valid reasons why you need to start and end other than January 1st to December 31st. But like I said, most of the service-based business owners that I work with, we're starting January 1st with the fiscal year and we're ending December 31st. But most importantly, I would just say no matter what business or what choice you do, just understand when your fiscal begins and your end, and it ends, because that cutoff date can be really critical if you're trying to make certain moves in your business. You want to know how much time you have to like get it done, or if that makes sense.
Yeah, yeah, sure does. And so that brings me to another question about reporting your quarterly taxes. I think I had that correct. How would or
The estimated
what
taxes, share.
yes, yes, yes. So I might be jumping too far ahead with far as the
Um,
size of a business, but that's why I basically want to know like what size business or how much income would a business be making when they need to get to that point?
So that was going to so not estimated tax specific, but let me just say this also, as a business owner, even as an individual, understand your tax dates, okay? And one of the tax dates that every business owner wants to know about are the estimated tax dates, when the estimated payments are due. It's
Mhm,
normally 4 times a year. So I say that to say, so what Sharon is talking about is, so in this country, we are on a pay as you go tax system. Okay. So think about it from a W 2 perspective. From a W 2 perspective, yeah, you go to work, our employer pays us, but they're withholding those taxes as we're earning that money during the year. And
mhm,
then they have designated time frames that they're required to do, basically file that tax that they've collected with either the state agency or the IRS, at the federal level.
mhm,
But when we're in business for ourselves, like we're the company. So we are required to, as we're earning that money during the year, so that's another plus of having that bookkeeping in place, because I know at the end of Q1, quarter one, I know at the end of quarter two, I know at the end of quarter three and four, whether or not I have any kind of net profit in my business. And that's what that estimated taxes is basically due on, if I have profit in my business going through the year and during those quarters.
mhm,
We're actually coming up now on the last Q4 um, estimated tax payment, January 16th for 2023. But I would just say definitely as a business owner, you want to understand the requirements of that. And what throws a lot of people off is it's normally an estimated tax payment. You're normally looking at your federal payment, your federal tax, which is based on your individual tax rate or your federal tax rate.
mhm,
State, if you live in a state where they collect state income tax. And
mhm,
but then also the kicker that gets people is something called self-employment tax. And it's
mhm,
another whopping 15.3%. So
mhm,
and this is why I was suggesting, especially as a new business owner, if I'm talking like foreign stuff to you, team up with a good tax professional who can kind of talk to you from the beginning about, say, listen, this is what this is. These are the time requirements that it has to be filed. This is what we want to look at in your business to keep you out of trouble. Because at some point you're gonna like have that profit. And what I've seen is like the business, they get their first year profit and we're at the tax table and they haven't made any estimated tax payments and they owe. And that's
mhm,
really traumatic for people. we don't,
mhm.
well, we want to be
Right.
proactive and help you plan properly so you don't owe, or if
Mhm.
you do owe, you already knew what was coming. You already knew that.
Okay. All right.
Mhm.
So now we want to go and get some tips to our individual tax, um, W-2 employees,
Mhm.
and how can they make sure that they are starting off 2024 on the right foot with their taxes?
I would just say, for both business owners when it comes to their personal return and just individuals, like, guys, don't push it off. Just like today, make your tax preparers day. Make that appointment early, right? Like, don't, I know it's not pleasant, but it's just think about like ripping that band-aid off. Reach out to him, reach out to her and say, you know what? I was thinking about you and I just want to make my tax appointment for, say, February 1st or whatever.
Mhm,
That's still enough time for people to get their tax documents. But what I find is that, people procrastinate so much. I'm trying to save you from doing your filing in March and April, because
mhm,
I'll be honest with you, like our brains are so scrambled at that point. You want to try to get this in to see you're prepared earlier is what I would say.
mhm,
And then also, you want to know too the difference between tax preparation and tax planning. And what
Mhm,
I mean by that is, so when you come during the tax season, we're all about tax compliance. That means we're trying to legally help you meet your filing requirement with the IRS or state authority, you know, but the best clients, they're coming back probably after the tax season, or we've met with them before the end of the year to do what's known as tax planning. Tax
mhm,
planning is looking at your full picture and actually being strategic with, okay, you know what? Let's find ways to minimize legally your tax obligation.
mhm,
As a business owner, we can minimize your tax all day, but have that conversation with me and tax planning and say, you know what, Miss Hope, I want to be able to buy a house next year. So that's a whole different way that I'm going to be looking at preparing your return, because I don't want to basically minimize your income to zero. I want to
mhm.
show some profit so that possibly you can apply and get qualified for a home loan. So those kind of conversations, having them outside of the tax season, they can be so proactive and so productive for my individual clients and my small business clients.
Oh,
Communication.
all right. And so what about investing in their 401k or something, some tax deferred, um, you know,
Yeah.
during the course of the year?
So definitely, if you're in a let me just start from the basics. With retirement planning, definitely there are tax advantages to doing retirement planning. Sometimes that can be phased out though, depending on like what your AGI is. So
Mhm,
again, talk to your tax person and know like, okay, when am I phasing out and what options do I have to do, whether it's through the employer or external retirement accounts. And we have partners that we work with to make sure that our clients are, getting the best advice with that. But I always say, if you're working for a W-2 employer, at least find out at a minimum what they will match. Okay, when will you be eligible for the match? So if it's 3%, 4%, at least up to that point, go ahead and put that money in there, because if you don't, you're leaving free money on the table.
mhm.
Okay. So I don't, does that make sense?
Oh,
You know,
yeah, definitely.
yeah. Okay.
Mhm,
Okay.
mhm.
And I
Yeah.
would just say, definitely understand the retirement plan that's available. But if there are things that you want to do external, you want to be able to do your own IRA externally. Only because when you're doing those kind of investments at a normal brokerage like Vanguard or Fidelity, the portfolio, the stock options, it can be a little bit more of options available for you to do
Mhm,
more robust investing with those. So, but then we have some people, they want to do the Roth IRA. That's,
mhm.
a lot of people don't understand that a Roth IRA, ain't it I'm old, okay? They didn't have this when I was growing up, when I was first starting to work. But any tax saving, I mean, any interest that grows in that is tax free.
Mhm.
A lot of us like old fogies, Sharon, you could probably speak to this with the retirement thing.
Yeah.
When I take my money out of my employer plan that I work for X amount of years, it's pre-tax. I'm gonna have to pay taxes on
Mhm,
it. But if
mhm,
your employer is offering like a Roth component, or if you go out and do a Roth yourself, all of that's going to grow tax free. So
mhm,
just I see, especially with my business owners, a lot of them are not planning for their retirement and using those vehicles to really not only save taxes now, but save tax, be able to take care of themselves in their twilight years. So
mhm.
definitely that's a conversation you want to have with, your tax professional to see how advantageous it can be, but just a retirement specialist to make sure that you're prepared down the line as well.
Great, great. So tell us about um some tools or resources that are out here. You told us about QuickBooks and things, but what other tools and resources that we can use either as a business owner or a individual that can help us with getting ready for our tax year?
So I would just say definitely getting ready for the tax year. You mean as far as organizing and being ready, or what are
Yes,
we talking about?
yes. Yes, yes, or
Right.
that will educate us to make sure that we understand what we need to do.
Yeah. So I would say, I mean, I know like for our clients in January, we're sending them out a list of documents and things like that that basically gets them started, like giving kind of like a roadmap of what we're going to need from them. And then Sharon, I can share with you too a lot of the tips that I talked about today, but some of the things I didn't get a chance to talk about. We have a download for our clients where it's just a freebie. You can download it and be able to get like a list of things that you can do as an individual and also as a business owner to really be prepared to see you're prepared in a couple of weeks, couple of months or whatever. So I would definitely say those kind of tools. Definitely if you're trying to organize from scratch, you have tools like Google Docs, free spreadsheet software, Google Sheets to help you really start laying that stuff out now and organizing your income and your expenses so that your tax person would love you. If you're confused about like, okay, what should I really write off? A good reference is the actual tax form. And you can Google for Schedule C. Schedule C is going to be a breakdown of all of the different tax categories that I would be asking you about if I were preparing your taxes. But you can kind of see, you can get an idea of like, wow, I can write that off. It's a whole list: advertising, rentals, insurance, all of that's going to be on that Schedule C. It's an IRS form. I would look at that too, just to kind of be like, okay, this, if you're brand new to business, you don't have an idea of what you could be writing off, that's going to be a good kind of glimpse into the future. I would say too, if you are a business owner and you're going to be trying to do things like the vehicle deduction or the home office deduction, you definitely want to be getting those logs, getting that information together for us now. I see so many people leave vehicle mileage on the table. I'm not sure what it is this year, but normally it's like between 50 to 60 cents per mile. That can add up really quick. So, but I can't give you that deduction. Like I can't do anything if I don't have a mileage log that shows your business miles with dates and what it was. So I'm going to need that. If you haven't been doing that with like an app like Mile IQ or whatever, use Google Sheets and just build it. Use your calendar. You could see where the appointments were throughout the year that you were doing. It really is worth your while to build that so that you can take advantage of those if you're in business, those vehicle deductions. Um,
Okay.
yeah, I could go on, but that gives you a picture of,
Yes, yes,
getting all the stuff.
definitely,
Yeah. But
definitely.
those kind of tips are in the resource that I shared that people
Yes,
can
yeah,
request.
and I put that into the chat.
Mhm.
So you please make sure that you download that before you log off of the platform so you can have that information for you to refer back to. And again, make sure that you go to Hope's website so you can learn more about what she does and how she can help you as a business owner or individual with your taxes and bookkeeping. So, Hope, do you have any type of events that are coming up that our listeners can attend and learn more?
Yeah, so we're going to be doing a Facebook Live next week. So I would definitely say connect with me on my newsletter or just send me a correspondence directly, and I'll make sure that I share that information. But doing that, we're going to be going into a little bit more in depth for business owners and for individuals too. But that Schedule C that I talked about, and really things that you can write off as a business owner, that's going to be next Wednesday at 1 p.m. Eastern Standard Time. So
Okay.
I definitely say check that out if that is something that you think could be advantageous for you as you're ending the year. But then also for our smaller business owners who are doing DIY bookkeeping, we just launched the Tax Minded Bookkeeper CEO Tax and Bookkeeping Support Group. That is a monthly membership where business owners who are just out here kind of doing their own bookkeeping and struggling. We support QuickBooks. You can come in. A lot of this kind of information, you can see I'm super hands on. My motto is no business owner left behind, and we support business owners to just making sure that you're able to do your bookkeeping during the year correctly, it's compliant, and you're getting the support you need to really win in that area.
Okay,
All
good.
of the membership program you can go to my website as well there too and look for membership in the navigation.
And they can follow you on what platforms?
I'm on Facebook. I'm on IG. IG is Tax Minded Bookkeeper. Um,
Mhm.
and also on Facebook is Tax Minded Bookkeeper. Yeah.
Okay. And LinkedIn?
I'm on LinkedIn too. I'm Hope
Yeah.
Brown,
Yeah.
Tax Minded Bookkeeper.
Bookkeeper. That's right. So
Yeah.
all the major platforms, you'll be
Mhm.
able to
Yeah.
follow Hope and find out what's going on with her, engage with her, and learn more about her and her business and how she can help you. And make sure you like and share this, what we're doing right now, and go to Hope's page, like and share what she has, follow her so you can learn more about being educated and keeping up with tax preparation so you can close out 2023 strong and start 2024 on the right foot as
Mhm.
we move into the next year. So, Hope, we are coming close to the end of our time here together, and I don't see any comments in the chat. So I wanted to see if you have any final words that you can provide to our listeners that will help them in the future.
Yeah, so I'll just tell you, so for me, I can do it for you. I can do your taxes for you. I can do your bookkeeping for you. We can be all hunky dory with that. But the real power that I like to like provide to clients and people that I interact with, I want to teach you more. Now I'm not expecting to make people, financial wizards, but in your business and in your life, like, I'm just trying to make sure that this financial literacy piece is something that people feel comfortable with. So like with these tax returns, like we got to understand what we're signing before we sign, what the businesses we're running. Like, reach out, man, so we can help you understand like the financial part and really understanding that so we can grow your business and just empower you. That's super important. So I just want to kind of plant that seed in people's minds, like be empowered. We're doing generational wealth here. That's
Right.
what I'm trying to do. I'm trying to affect generations so that you guys have the knowledge and can pass it on and so on and so on. So,
Exactly,
yep,
exactly. Creating that legacy that we want to be,
absolutely.
a financial literacy legacy, um, so we can carry on generation after generation, from what we had to the next one, so they can do better than
Yes.
what that we've done, and that keep that moving forward. So thank you so much for that. Make sure you join Hope next Wednesday. That'll be January. I'm sorry, January. I'm talking about January, December the 20th.
Yeah.
December the 20th at 1 p.m. Eastern time for her Facebook Live. And you find her on Tax Minded Bookkeeper on Facebook, and get some more tax tips. Make sure you follow her on LinkedIn, Instagram, and again, use these tools and resources that she's provided. And also, if you are able to listen to everything today, or you want to share this information, like and share it here. But you can go to my YouTube channel, Royalty Business Group, and you'll find this as well as my previous um, episodes there. And on next year, January I put the second, but I know that's wrong. It's January the 9th. I will be having Anne Marie Mahoney, who is a podcaster, and her podcast is about this life. So come and listen with Anne Marie and I as we talk about her podcast and how it empowers others, and how it can help you. So, Hope, thank you so much for your time today. I truly appreciate you. And I look forward to working with you in the future. I'm going to have to give you a call so we can sit down and really talk about some things. And we want to make sure that we get people out and listening to you and promoting you as well. So we're going to have to make sure that we do some more things together. So thank you so much.
Yes. Thank you for having me. I really appreciate it.
Thank
Yeah.
you. Thank everybody for listening this evening and in the future. Those who are listening to the recording, we thank you as well. And everybody have happy holidays, no matter whether you're doing, whether you're home or away, um, rest or with family, whatever you're doing. We hope that it's a pleasant one. So see you all in the next year. All right. Have a great evening, everyone. Bye-bye.